You said you realize that the money in your bank account is technically not yours. Now, most people don't realize that, but I pulled up SGR Law, Smith, Gambrill, and Russell website law. It's a New York-based law firm. And they have an article that says, does the money in your bank account really belong to you? And any of you can go do a Google search or a web search of any kind and just say, does the money in your bank account belong to you? And you'll find a series of these law firms telling you essentially the balance in your checking or savings account does not belong to you. You're surprised to learn here from their article that the funds in a general bank account do not technically belong to the depositor. At the moment of deposit, the funds become the property of the depository bank. Thus, as a depositor, you're in essence a creditor of the bank, and once the bank accepts your deposit, it agrees to refund the same amount or any part thereof on demand. That's a demand deposit. So do you remember what they did with Silicon Valley Bank?
Well, I remember that they protected everybody at Silicon Valley Bank, even the big depositors from the FDIC.
Yeah, now that's the key point. While it's true that the money, that it's not your money in the bank, it's just an IOU, the good news is the government has stepped in through the Federal Deposit Insurance Corporation and guaranteed that you're going to get your demand deposit back up to $250,000. In the case of Silicon Valley Bank, when it failed, they gave everybody all of their money. They created it to give it to them, essentially, but everybody got their money. So, but that's not what we're talking about here. That's a risk that we all should know about by now. It's called a run on the bank, and occasionally there are bank runs where people just all at one time go and try and get their money out, and it's not easy for a bank to handle that, and so oftentimes they'll close their door.